We should shortly be expecting comments from Fed's Bostic. Again, we have posted out the
So on the
registration
Fed
link
front,
on the
just a
feed
reminder,
for
in
those
around
who
about
are
1
listening.
minute's
Good
time,
morning, traders, and welcome to the first trading day of October 2022. It is October 3rd, Monday. It's 8:04 a.m. Chicago time. Sorry about the delay in starting out. A lot to handle this morning. This is episode number 2327. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. How are you doing? How are you? I hope you're doing well today. Hope you had a restful weekend. Holy cow, they're putting up this high rise next door, and it's just incredibly loud in here. That was not part of the lease negotiations for this new office. But man, it's just like they're hammering like piles into the ground or something. Anyway, sorry about that. So I did the disclaimer. Very cool. Let's dive right into our pre-market summary sheet from Convergent Trading. You can get this on Twitter by following twitter.com/conv trading, CONV trading. And it comes in, it's supposed to come in at about 8:50 a.m. every morning. But sometimes, like today, I run late and the sheet is not done. You're watching it update live here. One of the key things you want to keep an eye on the sheet that changes every Monday, because we run our rotation studies on Sunday night, are the rotations. And it's a measure of volatility. It's a measure of risk. The rotations have gone up relatively higher. The S&P went from about 8.5 points last week to 9. The NASDAQ popped, I think, from 28 to 31.5. And what these rotations mean is if we took a whole lot, something like, I forget what it is for each product is different, but for the S&P, we're looking at a sample size of 20 sessions, I believe. Currently, I'm running, let's see, it says at the bottom, 20 RTH sessions. And we're looking at the 1-minute rotations during RTH, and we're measuring how high a positive rotation is and how big a negative rotation is. Then we're taking those numbers, putting them on a histogram, and then we report what is the first standard deviation of that histogram, the first standard deviation around the mode or the most prevalent value on that histogram. If you don't understand those terms, just go to Wikipedia and read up on standard deviations and the mode. Very simple stuff. And we report it here. So what this is describing is on a 1-minute chart, which doesn't mean that you should... background chatter. Sorry. Let me turn that off. On a 1-minute basis, it doesn't mean you're trading on a 1-minute chart, but we have to use some sort of time frame. So on a 1-minute basis, a normal rotation for the S&P is considered anything up to 9 points currently. For the NASDAQ, anything up to 31.5 points. So that's your normal market noise, nothing unusual going on there. So if you're trading in that, in the middle of the sine curve or in the middle of the noise, that's where it is. We use this to set up targets, our scale outs, the reason of statistical or quant-based scale outs. And we use it to set stop limits as well. What's our standard stop? If we don't have a structural stop, what's our standard stop? There's a whole webinar on that or study hall at Convergent Trading. These numbers here also change every week. This is the range. Anything up to 84 points is considered run-of-the-mill, normal, looking back 1 year. So a sample of 252 days. Up to 84 points, we're still normal. Anything above that is considered unusual and generally gets our attention as unusual. For the NASDAQ's 365 points. Anyway, the market sentiment right now is risk on. The market's taking a bit of a bounce after testing below Friday's low. We closed quite bearish at the end of the month. Pretty volatile close as expected. I warned about this on Friday morning. Pretty volatile close on Friday. Lots of selling into the close on Friday and a very bearish close after testing higher. So we had a neutral extreme down close on Friday, which tells us that we have not found the buyers yet, and we're very likely to advertise prices lower to find those buyers. And so this resulted in a move down to 51.75 in the overnight session. If you recall, Friday's low was 35.96. We're in the 3,500 handle, 35.9650. We dropped another 25 points or so, and then we are rallying now. The S&P is up 1.04%, up 37.5 points from prior settlement, but the S&P is opening right in the middle of the prior range, and so is the case for other products. So overall, mild risk on sentiment, but we're still inside of the prior range. Nothing unusual today. What is unusual is crude. Crude is up. Wow, that is so loud. Crude is up 5%, 5.3%, because OPEC Plus has decided that they're going to cut production, and the number that was floated around is 500,000 barrels per day, which is pretty significant but not crazy. And then that number went up to 1 million barrels a day over the weekend, and this is causing a pretty strong move up in crude. So crude, which has been resisting movement down, look at my notes. If you're a Convergent member, just look at my notes from last night. And I've been talking about this quite a bit, even though crude sold off last week. We'll look at that for a minute. Sold off last week. I'm telling you, crude was showing all signs that it was not interested in lower prices in the same way that the indices have been doing. So crude resisting the movement down, it's sold off in sympathy because, you know, when you hit that margin call button, they hit it across the entire portfolio, and crude could be a part of that, but it did not participate. This morning, Tesla's down. Let's look at it right now. It's recovering, currently down 3.69%, but it was down as much as 5% as it failed to hit its delivery numbers. It is saying that the issues it's having are not demand-based, they are supply-based, but they did miss, and so they got hit with 5%, by about 5%. This is a significant part of the NASDAQ and the S&P. Again, crude popping on OPEC Plus, and really expecting a volatile week this week. This is a week that that is very likely to show some pretty big movement. So just be aware that this week is not one where you want to be complacent with your risk control and veer away from your plan. The whole thing about crude, by the way, it hasn't been decided yet, but that's what's being floated around. There's also this thing over the weekend that came across with Credit Suisse potentially defaulting, and many rumors came in saying that, many articles came in saying the opposite. Man, I mean, I traded through the Lehman Brothers thing. I traded through, I was there at 9/11 and the bank failures after that. And this is just a typical part of a recessionary cycle or a pullback cycle. The banks always are subject to these dramatic stories because they're operating on such high leverage, despite all efforts to change that from the 2008 crash. But here we are. Overall, the S&P balanced profile so far today. Very sharp, relatively sharp point of control. The volume is pretty strong, 453,000 so far since the last close, since Friday's close. 453,000. The inventory is 40% long, meaning 40% of the volume occurred above the settlement price, then below, and then the high is 41, the low is 95, the low is 35.71, and the point of control is 95, which is lower than where we were Friday. So far in the overnight session, the S&P has opened up and traded around settlement, but it has not tested the prior point of control, which is at 36.52, something like that. And we're looking for that to be tested here as we open. So that's where we are. The volume is much higher than normal, and so is the range at 71.75 points. Okay, so that's where we stand. Looking at the calendar this morning, we had the S&P Global Manufacturing PMI. Bunch of numbers came in. Italy came in strong. France came in just slightly off. Germany missed by about 0.5, and the Eurozone was off by 0.1, 48.4 versus 48.5. And the manufacturing PMI final for September for Great Britain came in at 48.4 versus 48.5, the same for Europe. This morning we have Fed's Bostic speaking currently. We get the S&P manufacturing PMI for Canada in right at the open, and then 15 minutes after the open we get the global manufacturing PMI final for September for the US. The bigger number, though, is the ISM manufacturing PMI. This is a very significant number for the Fed, so pay attention at 10 a.m. We get Fed's Barkin. 11:45, 2:15, we get Fed's George. The Fed parade continues. This evening, we'll get Fed's Bostic. And then this evening also, we get the interest rate decision out of Australia, which is expected to be relatively significant. So this is where all of this stands. It's a lot to cover this morning. Looking at what was expected on Friday. Friday, I was looking for the market to be responsive up, to push higher, failed to do so, and then drop. Overall, I was expecting and looking for a test of the 36.13 low from last week, from the overnight session on Wednesday night. So I was looking for this 13 to be tested. That's the primary scenario. The secondary scenario is it tests the overnight low, doesn't find any interest below there. We did have a weak overnight low, not find any interest, and then start to squeeze and then take out the 70, 71, and then start to push towards the 80 and stall out for the month end, quarter end period. But the primary scenario is for selling. Here's what took place on Friday. Oops. Very busy overnight session. Here's what took place on Friday. Pretty elongated profile in the session. We open up, we test down, and then we managed to squeeze. We pushed through the 70. You can see the 70 here held the buyers for a little bit, broke the IB high, held the buyers for a little bit, and then finally poked through, and then falls right back in, gets tangled in the day levels sandwich, which is the RTH and full session VWAP and mid, and then we get a continuation and we breach the IB low, which was very well formed. It looked like an excess for a little bit, although it was a weakish low. We breach the IB low, gives us a neutral day, and then we end up squeezing down through that 13. The 13 held for a little bit here. So you can see the 15 just there, just above. The 13 held for just a little bit, and then it finally busted through, and then the 13 acted as resistance right into the close. So pretty methodical type of trade on Friday. Pretty decent structure. I saw a pretty good rotational type entries. Friday's profile was completely price discovery based, did not really find consensus. You could see that it's like a serrated edge, like a saw type of sawtooth type profile. This says that there was a battle all the way through. And so this market is still trying to find balance, and it's unsuccessfully doing so on Friday. This is important information that we've run through the 4,300 to the 4,200, 4,100, 4,000, 3,900, 3,800, 3,700. And then last week we traded the 3,600 handle, and we did not find any balance at the 3,600 handle. So we've pushed into the 3,500 handle. This is how an auction is supposed to work, because as long as it does not find that it's cheap enough to bring buyers in, that buyers are still running for the hills or they're still sheltering themselves, then price has to, and I very rarely use that word, has to keep advertising prices lower to make it so that prices are now reasonable for buyers to start nibbling away, for cash to be redeployed into the market. We're not seeing that. We're still not seeing that, not even with the overnight session. So far, it is not a market where buyers have any confidence. So we open up, so we have a neutral extreme close. So we took out the first hour's high. We found sellers in the 85 area. We crossed the entire IB range, took out the IB low, so we had neutral. The expectation then is neutral normal, but we had a neutral extreme, which means that we not only did we test one side, break, go to the other side, we finished on the extreme low, so we expect the market to flow lower. Like, I would not want to be long into the weekend on the S&P if I were a day trader. I'm not talking about swing or investors, but as a day trader, we expect it to push lower, and it did. It ended up pushing about 20, 30 points below, which is relatively significant. 30 points used to be a whole day's range. And then we found buyers, pretty decent low in the S&P now, found buyers, and we have been climbing. And if you look at these bubbles here, the order flow is filtered. These prints are filtered to 100 lots or better, and you can see that the order flow has been very active. So what we've had is a tape that is quite active into the open. And if you look at the relative delta, the tape has been active enough that the volume, the high volume, the very large lot participants, which are 100 lots or more, consolidated on a consolidated basis, they've been pretty active. Most days, if you look back, you'll find that the yellow line is pretty much against the zero line, because generally very large lots don't interact overnight. You don't have the liquidity, but in today's session, there was plenty of lifting. And if you look at the delta, the delta and price are moving in the same direction. So what's happening here is the lifting. Oh, shoot. Sorry about that. We see the same thing. Yeah, we're seeing the same thing in crude. So here, again, let's start over. Crude and the S&P look very similar today. I screwed that up. But in general, we see these yellow lines, this yellow line for very large lots, and they're lifting. I wanted to talk about the same thing for crude. Now I ruined it. But overall, we have very large lots participating, as they did in crude, participating in the S&P, and they're pushing higher. So you saw in the prior chart, lots of bubbles, and in the overnight session, and they're lifting. And again, I'm going to say it, the delta is moving price today. So you could see price is being facilitated. It's starting to peter out here. I don't trade delta divergences, but it's important to recognize that when somebody lifts, when there's a good lift, in the delta, when somebody comes in and lifts, we want to see price move in that direction. If we don't, this is saying that there are limit orders sitting there absorbing all of that lifting. I know that order flow is a very tricky thing for people to understand, because it's a lot of if, then, and maybe type of statements. But essentially, if there's an offer there, 100 lot prints, that offer is gone, and we move to the next price, then volume is moving price. If 100 lots sitting there and 100 lot prints, and then somehow it prints that 100 lot again, and you have delta moving up and price is not moving up, then price is controlling the auction, and therefore this could be bearish even though the delta is rising. And what we have today is volume lifting price, and price moving in that direction pretty methodically. We have all three segments, all three divisions of the delta above the zero line, although the large lots have me a little bit concerned. There appears to be some lag there. But overall, delta is relatively strong coming in. It's not 14 or 15,000 like we've seen last week. But what this is likely to show is that on the open, that any pullbacks are likely to be shallow unless really they come in and hammer this thing down. So this morning, I would say it is very likely to push higher on early tests. So here's where we are in the S&P so far. You can see that we've been making pretty consistent lower highs, lower high, lower high, lower high, and we're working our way back to the point of control from Friday, 36.52. And to me, this is very likely to be overdone. Remember, the inventory is about 40% or so. Let's look at it again. 42% long. I'm expecting that this is likely to pull back, but I'm not looking for a push all the way down for a gap to settle trade. It could happen, but I don't expect a gap to settle trade this morning. I'm running out of time. Let's look at these scenarios this morning. There's so much to cover on Monday mornings. This morning's scenarios. Open. We are opening inside of the prior range. This is a very important factor. We're opening in balance. We're opening in balance here. So we're opening inside of the prior range despite the run, this trend in the overnight session. I'm not impressed. It is not occurring on a gap. So I'm expecting this thing to try to push up, but I'm expecting it to pull back, very likely right down into the 20 here. You can see the 20 was respected overnight from the current session, potentially push to 20 and then consolidate. And I'm looking for this thing to finally catch the 52, fill that 52 in, and then sit here at 36.50, at the 36.50 mid-century figure. That's scenario one. So we have a higher low and a lower high most likely today. We had a very wide range on Friday. It was the end of the month, and today we're likely to rest a little bit. Alternatively, open auction starts to move down, pushes higher, and then the sellers come in just like they did here, right? Just like they did here. The sellers come in, and we get an impulse down. In that scenario, I'm looking for a gap to settle trade, an internal gap to settle trade. So I'm expecting it to push down and re-verify the 0150 from Friday. And then what we have then is a resumption of the same auction from last week, and most likely a continued push lower. Okay. So most people are like, oh yeah, okay, you got the high and the low covered. That's not the point. The point is watch for what areas it's likely to respond at. So we're looking for the overnight high. We're looking for the 52. We're looking for the 70 above. If it does push through, we found sellers between 75 and 85 on Friday. Will they be there if we push into those areas? If they are, if I see they just come in and hammer it, then I'm going to look to the short side, back to the open, break through the IB, and start pushing towards 20, 0150. And if it gives up the 0150 and gets back into the 3500 handle, then we're likely to continue lower, continue to test that overnight low. Good luck today, and I'll catch you tomorrow morning. Take care.